everyone, welcome to the online class Kilora. I'm Lavanya. So, today we are going to start a new chapter that is Tally Reports and Financial Statement. In this chapter, we are going to understand the Tally Reports and the financial statements in Tally. So, let's go with the basic and start with it. So, the first we understand the meaning of Tally, and in the last class we have understood the basics of Tally and each and everything. So just we'll recall this Tally. Tally is an accounting software which is used for managing and maintaining the financial records, transactions, and accounts. It is one of the popular ERP solution for a small and medium-sized business. Here, this Tally provides features such as financial accounting, inventory management, sales and purchase management, taxation, it can be a VAT or a GST, payroll management, reporting and analysis. So these are the few features which Tally provides. So when it comes to the Tally uses, Tally is widely used in India and other countries also. So it helps you to manage the business financing, recording expenses, tracking the expenses, and generate the reports. And it is also known for its user-friendly interface and ease of use and robust feature. So here in the previous content we have used and understood the Tally, which is used to also manage a multi-currency transaction and also to create a ledger, record transaction, and generate reports in different currencies too. So in this way also Tally is very useful to us. So let's have an example how Tally can be used for accounting and financial management, like um, with the help of the companies and the transactions, like purchase of goods worth of 5,000 in Indian rupees from a supplier, or a sold goods worth of 75,000 INR to a customer, and a rent paid for 20,000 for a month in INR, and receives advance payment of INR 30,000 for a customer. All these are transactions of ABC traders. So you have to record these transactions in Tally as follows, like debit purchase account 50,000, credit suppliers account 50,000. And here when it comes, you have to understand this each transaction, like purchase goods worth of 50,000 for the suppliers. Here the amount will be debited to the purchase account for 50,000 and credit to the supplier's account for 50,000. And the next one is sold goods worth of 75,000 to a customer. Here you have to debit the customer account 75,000 and credit a sales account 75,000. Then the third transaction is paid rent 20,000 per month. So here the cash will be credited 20,000 and rent account will be debited in 20,000. And the next transaction receives advance payment of 30,000 for the customer. Here you have to debit the cash account and credit the advance from the customer account. So you have to report all these transactions in Tally with the help of four reports, that is balance sheet, profit and loss account, cash flow statement, ledger account. This balance sheet shows the company financial position at a given date. When it comes to the profit and loss account, it shows the company financial performance over a given period. When it comes to the cash flow statement, it shows the company inflow and outflow of a company cash over a given period. And the ledger report will say, and it helps in showcasing the detailed transaction and balance of each account. So this Tally provides a comprehensive accounting and financial management solution for the business. which enables them to manage the financial transaction and also generate the reports and make informed decisions too. So this is the basic information and recall of a tally. So let's understand what is the meaning of tally in this chapter. The first one is counting or adding up. Counting or adding up is like, in a simple or a general way, tally refers to an act of counting, adding up numbers, often to keep track of total or a score. For example, it is especially used in sports and games. So let's have an example. Tally of the points were displayed on the scoreboard. So for the sports and the games, to calculate the total and the score, you'll use this tally as a counting and adding up as a scoreboard. When it comes to the next one, a record of amount. Your record or account of something often keeps for reference or a proof. Here in this accounting and finance, tally can be referred to record the total amount, particularly in a content of financial transaction. For example, a tally may represent the total sales for a day or a sum of the expenses for a particular period. Let's have an example. A tally of an expenses was kept in a spreadsheet. So with the amounts, a few amounts will be recorded with the help of tally and kept in a spreadsheet, Excel, etc. And the next one is accounting software. Here, accounting software is also a name which is popular accounting software developed by Tally Solution, which means Tally. This Tally software is widely used for accounting, inventory management, financial reporting, and other business related tasks. So this helps the business automatic their accounting process and maintain the accurate financial records. Let's have an example. The tally of debit and credit must balance. So you can understand this accounting software as Tally ERP9, used for managing financial account, inventory, and other business operations. So these are the three ways of meaning of tally. Next, let's understand the advantages of tally. So here are the three important advantages of tally, that is ease of use, comprehensive accounting, and automation. What do you mean by this ease of use? This tally is also known as a user-friendly interface, which helps in making it accessible even to individuals with the inventory limited accounting knowledge. It employs a simple and intuitive design which allows the user to navigate through various features with ease. Tally is eco-friendly and easy to navigate even for those without extensive accounting knowledge too. Let's have an example. A small business owner, John, can easily create or manage a company financial records and generate the report and track the essential expenses using Tally Intuition interface. So this is one of the advantage for the Tally. The next one is comprehensive accounting. Here, comprehensive accounting is nothing but this tally offers a comprehensive suite of accounting functionality which includes general ledger, accounting receivable, payable, bank reconciliation, invoicing, inventory management, and financial reporting. This tally provides a complete accounting solution which covers all financial accounting, managing the inventory management, and tax compliance. And also, it allows the business to manage all the accounting needs with the single software platform. For example, a retail business that is XYZ store can use this tally to manage their financial accounts and track the inventory levels and generate the tax return in all in one place. And the next advantage is automation. Your Tally automates many accounting tasks, reduces manual data entry, minimizes the risk of errors. It can also automatically generate invoice and calculate the tax. So, the Tally automates many accounting tasks and reduces the manual errors and save time. For example, a manufacturing company, it can be a ABC or XYZ company, can use a tally to automatically generate the invoice, track payments, update the accounts, freeing up staff to focus on their core business activity. All this can be one of the advantage for the tally. And there are few more advantages of tally. Let's understand. The next one is real time reporting. Your tally provides a real time report and analytic which enables the informed business decision. So, let's have an example. A restaurant owner, John, can use this tally to track the daily sales, monitor the cash flow, and make data driven decisions to optimize her business. And the next one is multi user access. Here, Tally allows multi users to access the software, facilitate in collaborating and controlling. So, let's have an example. A large enterprise, ABC Company Limited, can have a multiple user access Tally with defined roles and permissions to manage different aspects of the business. This can also be one of the advantage of Tally. And scalability is like the tally grows with your business handling increased volume of data and transaction. So for example, a startup of ABCD company can start with a basic accounting features in tally and gradually move to an advanced features like inventory management and payroll as a business expands. And the next advantage is security. Your Tally has a robust security feature to protect the financial data and prevent unauthorized access. For example, a finance service company, ABC Financial, can rest assured that the sensitive financial data is secure and protected from a cyber threats with the help of this Tally advanced security feature. So these are the few advantages of Tally. So the next topic is Tally reports. There are few five Tally reports. The first one is trial balance, profit and loss account, balance sheet, cash flow statement, aging analysis report. Let's understand one by one. The first one is Tally trial balance report. This trial balance report is a report which summarizes the debit and credit balance of all the ledger account at a specific point in time. It helps in verifying the accurate of accounting entries and ensure that the total debt is equal to the total credit. A trial balance sheet is a report in Tally that displays a list of all general ledger accounts and their corresponding debit and credit balance. It's nothing but a snapshot of a company financial position at a specific point in a time, and it is used to prepare a financial statement like balance sheet and profit and loss account. So, this trial balance sheet typically includes the following columns like account name, debit balance, credit balance, and these accounts are usually listed in the following orders like assets, liabilities, equity, revenue, expenses. Assets like cash, inventory, accounts receivables, liability like account payable, loans, etc. And when it comes to the equity, uh, it includes capital, retained earnings, etc. And revenue, it includes sales and services. And expenses, it includes purchase and salaries. So these are the accounts which usually list in the following trial balance. And um, yeah, the debit and credit balance in the trial balance sheet are used to prepare the financial statement. That accounts with a debit balance are usually listed on a asset side of a balance sheet or as an expenses in a profit and statement, while the accounts with a credit balance are listed on the liability side of a balance sheet or a revenue in a profit and loss account statement. This is how the trial balance report is done in Tally. When it comes to the profit and loss account, here it is a report which shows the revenue, expenses, and net profit or loss account of a business over a specific period, typically a fiscal year. So it is helpful in evaluating the financial performance of the company and identify the area of improvement too. So this profit and loss account is also called as P&L report in a financial statement which summarizes the company revenue and expenses and a net profit or loss over a specific period. It can be a month, quarterly, yearly, etc. This report provides insight into the company's financial performance and helps the business make better informed decisions. Here, the profit and loss report for the year ending date will be given, and the revenue, the transaction related to revenue is given, and the cost of goods sold will be given. Expenses also will be given, and the profit before tax and the tax and net profit is also given. So, this profit and loss report shows that the company has a net profit of $1,20,000 for a year ending date. This report helps business analyze the financial performance and identify the area of improvement and make strategic decisions to drive growth and profitability. So this is how the profit and loss account report is done in the Tally. The next one is balance sheet report. Here the balance sheet provides a snapshot of a company financial position at a specific point in time. So it includes assets, what the company owns, liability, what the company I'm sorry. Here the asset which includes what it includes asset, what the company owns, liability, what the company owns, like credits, and equity, the difference between assets and liability. Here, the balance sheet follows the accounting equation that asset is equals to liability plus equity. So, here the balance sheet report is a financial statement that presents a company financial position at a specific point in time. So typically the end of the accounting period, this balance sheet is prepared. It provides a snapshot of a company assets and liability and equity are used to assess the company health and solvency of a company. In this balance sheet, you have to uh, have a heading balance sheet report as of a company details and a date it will be given, and the assets it will include current asset uh, and non-current asset. In current asset, cash and cash equivalent, account receivable, inventory all comes under current asset with the transaction amount. And then in non-current asset, the property, plants, and equipments, investments, and all this comes in non-current asset with the transaction amount. When we total this current asset and non-current asset, the total asset will be given. And when it comes to the liability, the it is divided into two types: current liability and non-current liability. In current liability, accounts payable, short-term loans total the current liability is done. And when it comes to the non-current liability, the long-term loan and non long-term will be given as per their transaction with their amounts. When we total all this, we'll get a total liability. When it comes to the equity, there will be two things, that is share capital and retained earnings. When we total it, we'll get a total equity, and we have to follow the accounting equation, that is asset is equals to liability plus equity. The balance sheet shows the company financial performance of a specific point in time, which includes the asset, liability, and equity. And also, this report is used to assess a company financial health, solvency, liquidity, and it is very essential tool for the investors, creditors, and also for other stakeholders. So this is how the balance sheet report is done in the Tally. When it comes to the cash flow statement report, your cash flow statement report is a financial statement that shows the inflow and the outflow of the cash and the cash equivalent over a specific period of time, such as month, quarterly, or yearly. It helps in understanding how change in balance sheet account and income affects cash and cash equivalent, which provides insight into the company liquidity and the solvency. So this here it provides an insight into a company liability to generate the cash and manage the liquidity and funds its operation. Here is an example for the cash flow statement with their um, transactions which is related to operating activity, investing activity, and financial activity. By adding all these three activities, you'll get a net change in cash, and this cash flow statement report shows the company inflow and the outflow of the cash and cash equivalent, which is over the year ending date. It provides insight into the company liability to generate the cash and manage its liquidity and funds its operation. So, in this cash flow statement, there are three important things you have to understand, that is operating activity, investing activity, and financial activity. The operating activity, which shows the cash flow from the company's core operation, investing activity shows the cash flow from the company's investment and diversification, and the financial activity, which shows the cash flow from a company financial activity such as loan and dividend. So these are the three important things which helps you to calculate the net change in the cash section, shows the overall change in the company cash flow balance over the period. So this is cash flow statement. And the last one is age analysis report. This age analysis report is nothing but a report that shows the length of a time invoice or a payment have been outstanding, typically categorized into different age groups like 0 to 30, 31, 0 to 30 days, 31 to 60 days, 61 to 90 days, etc. This report helps the business identify the slow-paying customer management cash flow and make informed decision about credit extensions or selection efforts. In Tally, the aging analysis report can be generated for accounts receivable and accounts payable itself. It helps in monitoring and managing the cash flow by identifying the overdue invoice or a payment. So when it comes to the account receivable, the outstanding invoices from the customers are account receivable. Outstanding payments to the suppliers is account payable. Let's have an example of aging analysis report. Your age group will be 0 to 30 days, 31 to 60 days, 61 to 90 days, and 91 to above. So 0 to 30 days will be 1 lakh, that is invoice amount, and 31 to 60 will be 75 invoice amount, and 61 to 90 will be 50 invoice amount, and 90 above will be 25,000. So the number of invoice in 0 to 30 days of age group with 1 lakh invoice amount will be 5 members, and number of invoice for 31st to 60 days with the amount 75,000 will be 3, and for 61 to 90 days there will be 2 peoples, and 91 and above will be 25,000. So this report shows that 5 invoice worth 1 lakh are pending payment within 0 to 30 days, and 3 invoices worth of 75,000 are pending payment with 31 to 60 days, and 2 invoice worth of 50,000 are pending payment within 61 to 90 days, and 1 invoice with a worth of 25,000 is payment pending beyond 91 days and above. So, by analyzing this report, the business can identify the area of improvement in their accounts receivable, payable, and manage, and take an necessary action to optimize their cash flow. So, these are the 5 important tally reports in Tally. So, it is very important to understand this Tally reports. And the next topic is disadvantages of Tally. What do you mean by what are the disadvantages of Tally includes? The first one is limited cloud functionality. Your limited cloud functionality is a Tally primarily operates as an on-premise software, which means it is installed and run on a local computer or a server. Limited cloud functionality. While using Tally, it introduced some cloud-based feature in recent version. So its cloud functionality is relatively limited compared to other cloud-based accounting software. So this can be a disadvantage for to business that requires remote access or collaboration capability. Here, this Tally is primarily an on-premise solution, and its cloud compatibility or limit, making it less accessible and scalable. This can be one of the advantage in Tally. Let's have an example. A business with a multi-location can access their Tally remotely make it difficult to manage financial cross location across location. So the next advantage will be lack of advanced features. While this Tally offers comprehensive accounting functionality, it may lack some advanced features found in other accounting software solutions. So, this a lack of advanced feature Tally may not only have advanced features and functionality that larger business or enterprises requires. For example, it may not only have robust project accounting, multi-currency support, or an advanced budgeting and forecasting capability. Business with a complex accounting needs may find Tyler features said to be insufficient. So, let's have another example which helps you to understand easily. Let's understand a large enterprises which needs an advanced inventory management feature with a tally which does not offer, forcing them to use the additional softwares. And the next one is dependency on local infrastructure. Here, Tally requires a local server or a computer to run, which can be limited for a business with a multi-locations or remote workers. This Tally on-premises nature means that businesses are responsible for managing and maintaining their IT infrastructure, which includes servers, backups, software updates. This can add to the overhead cost and requires technical expertise to ensure proper functionality and security. This can also be one of the disadvantage for the Tally. So let's have an example. A company server crashes and they cannot access the Tally until it's restored. So causing delay in a functional operation can be a disadvantage, right? The next disadvantage is learning curves. What do you mean by this learning curves? A Tally has a steep learning curves, especially for those without accounting knowledge, which can make it difficult to implement and use efficiently. So while Tally is also known as a ease of use, there may still be learning curve for users, especially those who are with limited accounting knowledge or experience. The training and familiarization with this software may be required to fulfill the leverage its capability, which can consume time and resources both. So let's have an example. A new accountant takes weeks to learn Tally, so reduces the productivity and increases the training cost is can be one of the disadvantage for the Tally. The next disadvantage is customization challenge. Here, Tally can be inflexible when it comes to customization, making it difficult for the business with the unique requirements to adapt the software to their needs. So, while the Tally can be customized to some extension to meet the business needs, requirements, customization options may be limited compared to their other software solutions. Business with highly specialized or unique accounting needs may find it challenging to adapt Tally to their requirements without extensive customization efforts. So let's have an example for this. A business needs a customized report, but the Tally limitation makes it difficult to create and requires additional software or expertises. And the next and the last disadvantage is limited third party integration. Your limited third party integration is a Tally may not only integrate seamlessly with other software's application or a service, it helps in limiting its ability to connect with the other business system. Your Tally may have limited integration capability with third-party software application. So, particularly we can compare to the cloud-based accounting solution that offers extensive app marketplace and integration with other business looks tools. So this can restrict the business from seamless integrating Tally with other systems they use such as CRM, inventory management or e-commerce platform. Let's have an example. Here a company uses a specific payment gateway but Tally does not integrate with it. So it requires a manual data entry and increases the error. So, this is the example which helps you to illustrate the limitations or disadvantage of Tally, how they can impact the business in different ways.